Good morning, this is Andrew from Trend Following Mentor. Today is the 14th of January. In this short video, we're going to give some updates on what I see is happening in the stock market. And again, this is strictly for educational learning. None of it is made for any specific recommendations for anyone or any idea. The idea is that you learn so you can actually better your portfolio and learn that you can be independent. Where we want to first start off is where we start off at the S&P 500. And let me open that first. Basically, I want to talk about the S&Ps. And actually, yesterday was one of the biggest drops in the last 4 months. And what is not surprising, as I've been talking about in my prior videos, is that we've been having these distribution days. You can see yesterday was a very strong down day. We closed on the lows, and you had higher volume, considering all these other days. So yesterday what happened is we had another distribution day. So now we have about 7 distribution days on the NASDAQ and the I think it's 6 on the S&P and 7 on the NASDAQ, or vice versa. But the idea is when you have these distribution days, the historical possibility is the market is weakening severely. So that's one, you could say that this uptrend is under pressure. Then the other thing I do is I look at a 10 and a 30 exponential moving average. When there's a crossover, and basically the uptrend is even greater diminished. And you've seen them, when we go back, I can tighten this up. And it keeps you out of where the negative periods are and enables you to benefit when there are strong periods. Because there's nothing easy with the stock market. It's always a challenge. But when you're in these negative periods, you don't know how worse they can get. And again, I'm not a bear, I'm not a bull. I'm just trying to be a realist. Like this is in 2011. And in 2012 here, but there was a 2011 I want to show that was really negative, and we were also below the 200-day moving average, and that was our first, let's say, correction of this bull market that started in March of 2009. And the other key point is to really watch the 50-period exponential moving average. But weighing out all the facts, again, we have a divergence here. This is the MACD. When you have lower lows on the MACD, yet higher highs here, it's another sign of caution. Another very strong sign of caution for me that I've been speaking about repeatedly is investors' intelligence. Right now, we're at about 61.6. This is, you can see yourself, one of the extreme highest readings. Whenever we get to these high readings, the markets sell off, or you can do vice versa. The actual lows and bears, which were at pretty much a historical low. You can see this also prior to the breakdown in the early 2000s. The thing is, we have to be very, very cautious. You can see this right here as well. Again, don't be a bear, don't be a bull. Listen to what the market is telling you. And combining out everything else that's happening, you had Dennis Locker also saying about more tapering. I mean, maybe that was the reason yesterday, one of the Fed chairmen. But reasons don't matter. Start to learn and read a chart. The same analogy is like I had a discussion with a client. He was talking about Goldman Sachs because Goldman Sachs talked about the market. It doesn't mean anything. When you look at a chart, you don't know who said what or who did what. But the fact is, when you look at charts, you get a feeling of where you stand in the market. And that goes to what we really do. We buy breakouts as a trend follower. And the other thing is what we do is we buy retracements. And there's many times you can make money in a bull market where you're almost buying weakness on these retracements. And goes on to some of the charts that I'll talk about. Well, I don't want to go to gold yet. One second. Like yesterday, you can look on the positive side. Jazz Pharmaceuticals actually closed up. So what you want to see is something that in a bad, let's say, stock market day closes up and it's showing strength. That's very positive. I was actually in these trades, Biogen, and you can just see the simple idea. Had a base, had a trend line break, it broke out, and now it's turning right back. It's not looking overly healthy. And you can also, you look at the volume on it as well, and the volume was rather strong. So this is the idea of buying a retracement in a bull market, or possibly maybe we're not in a bull market anymore. I really don't know. We'll see. Time will tell. And then Priceline's another example. I took the trade. I went to break even. And now it's back on the 50, because a lot of times when you have these pullback to retracements, they pull back to the 50-day exponential moving average. So this possibly could be a trade. You could be buying the high and then risking down to the lows. And don't let also that it's an expensive stock scare you. Just do less shares. Do less than 1% of your account size to figure out what you really want to do, what you're trading. Next thing I want to talk about real quick is gold. And it is potential that gold could be bottoming. When I look at gold, I look at the junior miners, and the reason I'm saying the junior miners, these things have gotten completely beaten up, where they went from $175 a share, as you can see, to $34 a share. And as much as we talked about the S&Ps having a divergence, a negative divergence, here you have a positive divergence, where you're going lower, and these are going higher. So it's something to put on your radar screen, either gold, or I look at the junior miners, this GDXJ. Again, whoops, we go to, well, okay, here's gold itself. It doesn't matter. You can see it here. This was the example. You're going lower on the chart, yet higher on the MACD. Again, this is Andrew from Trend Following Mentor. None of this is meant for any advice or personal advice to anyone. The whole key of why I do this is to learn and to share and to give back. I've learned over many, many long years, and it would be terrible to see you lose money in, eventually there'll be a bear market or a correction. I don't know when, but you try to read the signs and learn from them, and that's really the motivation of me making these short videos. They only take me a couple minutes to do, and it's just my way of giving back. Thank you.